Good day, all. Ira Epstein with your weekend edition of your financial market wrap-up. And this is for September 20th, 2019, and we're after 4 p.m., so the settlement prices are all in. Now remember, in this particular edition, we're going to cover one monthly chart, and then everything else is the weekly chart. And then Monday through Thursday, we're going to cover the daily charts with one weekly chart. So I give you the longer-term view over the weekend. Now, there was an incident that happened today, and I don't know what to make out of it myself. And what happened is the Prime Minister of Australia was in town. The President did as usual, take questions from everyone. All of a sudden, the attitude on China and their delegation here took a sudden sour look. It was as though they're here to talk agriculture trade, which I think the Trump administration needs, and the farmers certainly need it. And it sounded like we were going to get some type of trade deal, and China needs pork desperately. And I'm going, okay, and he keeps talking, and it's sounding, to me at least, like, well, if I can't get a whole deal, I'm not going to do a deal. And I thought we were moving into incremental parts, and I thought that's where it was going. Well, apparently that isn't going too well. Remember, the delegation was supposed to send some of the people that came in, and there's a lot of people that come in for these, into the Midwest, into Montana, goodwill measures, talking to breeders, talking to farmers, ranchers. That's been called off, and suddenly the Chinese are leaving. I don't like what I heard, and neither did the stock market. It went negative. Now, negative on a day like today could be anything. Remember, it's triple witching day in the stock market. The options are gone, the cash markets change, everything changes, but it's concerning. The gold market, while these are the settlement, the gold was up at 1824 in the last trade of the day. Silver was pushing 1803. So the markets are looking at something different. The bonds were up a full point at the end of the day. The market is seeing what I'm seeing. I don't think people liked what they were hearing. When you take a look at a monthly chart of just closing prices, 3013.60 is where you're at, which is the highest monthly close that we'd have had, but the month's not over. This is September 20th, so that's going to change, and I don't know where it'll be in the next 10 days. But you can see you're over a resistance point. The weekly chart we do know. And for the weekly chart, you finished at that 3013 level, which is 10 points shy of 3024. That's where you're at. And you weren't too far off at the last trades of the day from where the market actually was. So that's the good news. Where are we? We're in a serious resistance area. If you can burst out of this, then you're talking another level to the upside. Right now, unfortunately, it's tweets or what the president says. I don't know. We go from good to bad so fast. Keeping up with it is hard, and that's why I'm a chartist, not trying to be a fundamental trader. As a chartist, the trend is still up. You're in a resistance zone. The pattern on the swing line, and remember what a swing line does. A swing line looks at the previous week, and it has 5 variables to choose from. Is it going to be the line to the upside or the downside based on, do you have a higher high week, a lower low week? Do you have an inside week? Do you have an outside week up or down? Those are the variables and the rules I teach in my charting course. But right now what we have is higher lows and higher highs. Even if you break down on the opening, as long as you don't first get over this week's high, which was 30.22 it'd be a pullback, and you'd be keeping these numbers alive bullish. The 18-day average of closes is the red line. You're over that number. That is a potential support number, but it also, because you're over it, means the bias is up. So until it closes under it, I have the swing line in an uptrend, and I've got the bias up. Where's resistance? It's above the market. We haven't even challenged it. That number's up at 30.75. Now, if there's clarification over the weekend, and the deal's still on, or the makings of a deal is still in place, well, then what just happened at the end of the day can be erased, and maybe that comes into play. In terms of momentum, the momentum is up. So, barring what we heard today, momentum up, bias up, trend up. Everything's still in an uptrend. In the NASDAQ, momentum up. And on the weekly charts, you do not look to see if it's overbought or oversold. It's either pointing up, pointing down, sideways. Does not get overbought or oversold. Higher lows, higher highs again, couldn't make it to the upper Bollinger Band. You haven't done that since April, just in case you're interested. And the support back at the 76.85 level. In the Dow, higher lows, higher highs. Now the Dow did get up to that Bollinger Band back here, backed off, and now the question is, can it add another leg to it? In fact, that's going to be the question for all of this. Can we add another leg? We've seen this week where we saw central banks all over the world either hold their, actually I'm wrong, Norway's bank raised its interest rate. All the other banks held or dropped rates that had the major bank meetings. So that's the only one I know that actually raised rates. But you've still got an easy money policy around the world. In the Russell, the resistance is the 100-week average of closes. Not strong enough yet for the upper part here, and it's not trending. This market has a lower low, higher high, and if you look at the current price, you're right into that resistance. We know that in all the stocks. Can you get going from here? Don't know. September's notorious for being a down month. October's notorious for volatility. Be aware of that. In the cash VIX, the market is dropping back to the lower Bollinger Band. Each time you've recently got to this, you see this much better on the daily chart, by the way. The market has bounced away at least back to the 18-week average of closes. So we're at a zone that adds to me a little more fear. Remember, the lower this goes, the more bullish stocks are. When you start to bounce the other way, it's fear coming into the market, and they're putting on what I'd say, saying to you, uh-oh, be careful. Well, it hasn't done that yet. I'd like clarification this weekend. In the note market, battleground is the 18-week average of closes. The market peaked out, and I want to say it peaked out. This was still very bullish through the week of September 6th. Last week, you broke through that low. Went right to that line in the sand, as I like to call it, the neutral spot on the chart. Momentum still down. You got a bounce this week, but you're out of the uptrend. The bias is up and momentum is still pointing down. Not pretty. In TLT, you stepped out of the uptrend. The bias is up. Momentum is still pointing down. In the dollar index, if you take a look at what's been happening these months on months that you hit that upper Bollinger Band, it is a resistance zone in the market. And if you've looked at it, I say the pros have been coming out up there. Now what they do after the correction, well, that's what we talk about on the daily charts. But now what you did this week is you actually broke the uptrend pattern. You had hit 2 weeks ago the upper Bollinger Band, actually 3 weeks ago. It's the first time right here. That's the week of August 30th. You went through it a little, didn't do very much by doing that, pulled back after hitting it the third week, but this week's break took out a previous low. You're out of your uptrend. The bias in the market, the settlement today is 98.13. And that is over the 18-week average. It's up here. So the bias is up and momentum's pointing down. The chart's a mess. In the eurocurrency, you're getting that bounce, but you didn't take out previous highs. Momentum's trying to come up. The trend is still down in this market. In the peso, the market's had a heck of a rally up to the 18-week average, trying the 100-week, and then pulled back. Now for the week we're at 50, 70, and you're right under the 18-week average, which is 51.32. The trend in this market is still on the weekly chart down and up on the daily chart. They are fighting themselves. Obviously, the one factor, USMCA, is what everybody's looking for. Can that bill be brought to the floor of the House of Representatives? And if it is, could be a little bit of support for that. In the Canadian dollar, you were up for the week, but as you know, Justin Trudeau got himself into a bit of a pickle here with the blackface, and you're sitting here with a horse race coming up in the next 4 weeks for the next prime minister, and that hurt. So now the market's sort of stuck here, and it's not trending. You have a higher high, lower and low, momentum down. For the week, you finished at 75.39.5, so the bias is down as well. In the Japanese yen, you got that bid, and it drove the market back up a little today. People are now wondering, and I'm telling you, I was watching it, and I couldn't believe what I was hearing. The president with the delegation still here, maybe we won't do a deal. You don't have to negotiate while they're still here. I was just surprised. He is the president. I respect it. When you go to the bar chart here on the Bitcoin, you're neutral. This market's just hugging this right now. It peaked out up at the Bollinger Band tops, ran back to the 18-week average of closes. The last break low was 93.05. This week's 96.05. In order to turn the trend up, you've got to get back over this number. Any settlement under the 18-week average could be a problem for the market, depending on how this week goes. This is going to be the trick week, as I call it. We know about what's going on in the Middle East. We know about the attack on Saudi Arabia. We know the anger that's going on. Nobody's attacked Iran at this point. The UN mission goes on next week. It's going to be theater to watch regardless. But the spread differential makes sense. Where's oil under attack? In the Middle East. It's not in the U.S. So the spread between WTI and Brent, which is the oil coming out of there, is widening. I don't think anybody would argue that. You're into a key resistance of the 100-week average, the 18-week average in Brent itself. It had a heck of a week, up $4 for the week. That, as I said, is the Brent. The trend is still up, but it has hit upside targets. WTI's done the same, but WTI, as you can see, backed off quite a bit by the end of that. If I come to the Brent, you can see you got up to these numbers, 68.63 and 68.18. You finished 64. So if you don't think that those were resistance points, fine. I do. Gasoline, where do you think the resistance is? That line in the sand. You often go to it, and that's where games are decided. You got there, and you broke a downtrend. You know, via the news of all that, once you got through 174.56, you broke the trend that was in place, but you had hit, actually back here was where I think the pros took money off the table. If they sold it again, then they took money off the table there. I don't believe that the pros keep selling under Bollinger Bands or buying over them. You may think so, I don't. In the heating oil, up to the combination of the Bollinger Band 100-week average. So if you were my client and I were your broker and you'd say, okay, Ira, here we are, we got a piece of news. The hardest thing is when you get that piece of news to want to do what's counterintuitive, because you're going to say it's going to the moon. That's what people say. And yet you've got these two numbers, and here's the event, and if you didn't get it, you left money on the table. That doesn't mean you did the wrong thing. That's all I can say. You know, I don't know where prices are going to end up, but I know what at that point could be the case. If you like what I just did here, you're going to love what I do in the mornings, because then I can really let go. In my morning subscriber video, which is not on YouTube, it's not on other people's websites, it's only in areas actually where it's a subscriber. I'd let it on a website without a problem other than mine if it's a paid subscription that I control. And that's not a problem for me. But I start you off each morning as though, hey, let's have some coffee together. Keep your robe on and let's go with this. And we're going to cover 40 charts on the futures and 5 on the ETFs in a certain manner each and every time. And the reason for the manner is that video can be 20 minutes long. I want you to be able to pull the bottom scroll bar and get to the section of it you want and know where you're at. So the scroll bar is going to light up and say, I'm in one of these sections. I want to be in the metals, or I want to be in the foreign currencies. Just do that. Or on the side, it's going to say foreign currencies, metals, energies. Go right there. Time is everything, and I want you to enjoy what you're doing, but I want to throw ideas out at you. Now, when you trade, you're an S&P trader. The minimum tick in the S&P, you know what it is. It's a $50 item. It's $12.50. My subscription is all of $7.95 for the first 30 days. It's almost half the price of that first tick. If I can throw an idea, help you with something, what's the real cost? Even after that, it goes to $15 for every 30 days. And as you'll see on the website over the weekend, if you go there, there's a button, monthly or yearly. You can go to yearly and we give you a price break on all of that if you pay a year up front. But the idea there, and the whole idea is starting you off, understanding what's going on, and because I put it out so soon, you'll see when I record, the time's right there. It's before 6 a.m. most of the time, sometimes 5:30 a.m. Central Daylight Time. It's before the U.S. markets open, always. That's what I want to do. I'd have to be sick or a computer screw up for it not to occur. I want you to have what's coming out in reports in the morning. I want you to also know what happened in Asia, what's happened in Europe, how it's impacting the markets, because we're going to real-time charts and we're looking at what's going on. So if you think that can be of service to you, well, give us a try. In addition, if you have a smartphone, we're going to give you free a $40 app. It's yours to use the whole time of the subscription for free. That's going to give you quotes, charts. It's going to also use a push notification. So when I publish this, you'll hear a bing on your phone. If you've set up the tones to do that, just hit it. You'll see the message. It's going to open the app right there and you can watch the video. Can I make it any easier? To get to the page that explains this all, you can also click right up here if you're watching me on YouTube. I hope you become a subscriber. Hope you like the information, and I'm going to do more video reports very, very shortly. They'll begin this week. I may even start trimming them. Only subscribers at times are going to be able to see some of these, and I think if you looked at the gold report, it was pretty good. I'm Ira Epstein. You have a good day.